Hybrids are a security that sit between equity and debt in the capital structure of a company. Broadly speaking, they generally show equity-like income, but with much lower volatility. So we're looking at about probably a quarter of the volatility of the broad equity market.
The challenges are that they're very complicated securities. They're very difficult to price. That means there's often big pricing mistakes or errors. That brings opportunities, but that's the first challenge. The second challenge is actually getting access. A lot are traded in the unlisted bond market. It's only available to insto investors largely, so very hard for retail investors to get access to that. A third challenge can be diversification. There are 85 or so securities across the sector. Building the portfolio that you need with your risk and return preferences that has the right level of diversification can be a challenging exercise.
HBRD is an actively managed fund trading on the ASX that invests in hybrid securities. Its goal, pure and simple, is to make investing in hybrids simpler and more efficient for retail investors. Some of the potential benefits it might offer are access to an active manager who may be able to outperform the hybrid market, the ability to potentially mitigate some of the risks and complexities of hybrid securities, added diversification for portfolios, and of course the income that investors expect, including franking credits from this space.
In HBRD right now, we'll have at any point in time between 35 and 40 securities, potentially a few more, and we have traditional listed hybrids from the major banks, regional banks, but also unlisted hybrids in the bond market that retail investors can't ordinarily access. We think it's a good time to invest in hybrids right now. We think the assets are cheap. We think that there's scope for capital appreciation as yields will compress.
When we brought HBRD to market, we thought simply about making life easier for existing hybrid holders. Using this product, they can simplify the complexity that they've experienced historically with hybrids while still maintaining that income objective that they've often had from that type of security, and of course the lower volatility that hybrids have relative to owning shares in equivalent companies.